EPK Capital presents Daily Brief for 22nd of 2025. Hello everyone, welcome to EPK Capital's Daily Brief video. In this series, we try and update you and make sense of all the important news from the world of finance that came out globally. So, without further ado, let's begin. Yesterday's session was a perfect example of a split market, a tale of two economies. While the blue-chip Dow Jones Industrial Average charged to a new all-time high, the tech-heavy Nasdaq faltered. But the real story, the one that will dominate trading today, unfolded after the closing bell with disastrous earnings reports from two of tech's biggest names. Let's get straight to the numbers. The closing bell, a record for Dow. Here's where the market stood at the close of trading on Tuesday, October 21st, 2025. The Dow Jones Industrial Average was the star of the show, rising 218 points, or 0.5%, to close at 46,924.74. This marks a new record high for the 30-stock index. The S&P 500, however, was almost perfectly flat, rising just 0.22 points to finish at 6,735.35. The Nasdaq Composite showed clear weakness, falling 37 points, or 0.2%, to close at 22,953.67. The weakness was even more pronounced in small cap stocks, with the Russell 2000 dropping 0.5% to 2,187.69. In other key indicators, the 10-year Treasury yield held at a 6-month low of around 3.97%, and the US dollar index climbed 0.4% to 98.93. The VX, or volatility index, ticked up slightly to 18.56, showing a bit of underlying caution. The why? A market split by earnings. So why did the Dow hit a record while the Nasdaq fell? The entire story of the trading day can be told through corporate earnings. The Dow was carried by strong reports from old economy, industrial, and consumer giants. General Motors, GM stock, soared nearly 15% after it blew past third-quarter earnings expectations, and more importantly, raised its full-year outlook for 2025. 3M, MMM, rallied 7.7% after the industrial conglomerate posted stronger than expected earnings and also raised its 2025 guidance. And Coca-Cola, KO, shares climbed 4% after it too topped quarterly estimates. This strength in industrials, automakers, and consumer staples was enough to propel the entire Dow index into record territory. On the flip side, the S&P 500 and Nasdaq were dragged down by weakness in other sectors. The single worst performer in the S&P 500 was the gold miner Newmont, NEM, which plummeted 9%. We will cover why in our commodities section. It's a massive story. Other laggards included Philip Morris, which fell 3.8% on concerns over high marketing costs, and Quest Diagnostics, which sank 3.1% after trimming its full-year guidance. This set the stage for a tense after-hours session where investors were waiting on two critical reports from the tech world, Netflix and Texas Instruments. After-hours bombshells, Netflix and Texas Instruments. This is the main event. Just minutes after the market closed, the futures market lit up as reports from Netflix and Texas Instruments hit the wire. First, Netflix, NFLX. The streaming giant reported a massive miss on earnings per share. EPS came in at $5.87. The consensus estimate was for nearly $7 per crore. Revenue was $11.51 billion, which was in line with expectations. The stock immediately plunged 5% in after-hours trading. The company's explanation for the huge miss was a one-time tax charge of over $600 million related to a dispute in Brazil. While Netflix's forward guidance for Q4 revenue was slightly above expectations and it noted strong growth in its advertising tier, investors did not care. The headline EPS miss was all that mattered, and that stock will be under heavy pressure today. But the more significant report for the broad economy came from semiconductor giant Texas Instruments, TXN. This report was a 1-2 punch. First, the Q3 results. The company actually beat estimates, posting revenue of $4.74 billion and EPS of 148, just edging out consensus. But then, the guidance Texas Instruments forecast for the fourth quarter was, in a word, disastrous. The company guided Q4 revenue to a midpoint of $4.4 billion, well below the $4.52 billion analysts were expecting. Worse, it guided Q4 earnings per share to a midpoint of 1.26, a huge miss from the 1.40 consensus. The stock collapsed, falling over 7% in after-hours trading. This is critical. Texas Instruments makes chips for everything: cars, factories, electronics. A weak forecast from them is a major red flag for the entire semiconductor industry and signals a potential slowdown in the global economy. Expect this news to weigh heavily on the entire tech sector today. Global markets and political watch. Around the world, the picture was a bit more optimistic during Tuesday's cash sessions. In Europe, markets were flat to slightly positive. London's FTSE 100 and Germany's DAX both finished nearly unchanged. In Asia, markets were stronger. Japan's Nikkei 225 rose 0.3% and even hit a brief intraday record high. In China, the Shanghai Composite gained 1.4% and Hong Kong's Hang Seng climbed 0.7%. This optimism in Asia was driven by political developments. The main story was a continued thaw in US-China relations. On Monday, President Trump voiced doubt that China would invade Taiwan and confirmed he would travel to China early next year. Yesterday, Beijing's foreign ministry responded, reiterating its official stance on Taiwan, but adding that tariff wars serve no one's interests and that issues should be addressed through consultation. This easing of tensions has been a positive for global sales. In other political news, Japan is set to get its first female prime minister, Sanae Takaichi, a development that is impacting the yen. And in the United Kingdom, new data showed government borrowing has surged to a 5-year high, which put pressure on the British pound. Finally, on the Federal Reserve, there were no major speakers yesterday. The market is still pricing in potential rate cuts, as evidenced by the 10-year yield holding below 4%. However, with a key CPI inflation report due on Friday, that higher for longer narrative is still very much in play. The great commodity crash, gold plummets. Now, for one of the biggest stories of the day, a violent crash in the gold market. After hitting a record high of nearly $4,400 an ounce on Monday, spot gold prices completely collapsed. On Tuesday, the precious metal plunged as much as 6%, its biggest one-day percentage drop since 2013, falling to a low of around $4,120. This massive wave of selling was attributed to profit-taking and, crucially, the easing of geopolitical tensions between the US and China, which reduced the safe haven bid for gold. As we saw, this hammered gold mining stocks like Newmont. In the energy market, WTI crude oil finished a volatile session slightly up, gaining 0.5% to settle around $57.82 a barrel. This small gain came after the U.S. government announced plans to purchase 1 million barrels to help refill the Strategic Petroleum Reserve (SPR). However, this small purchase doesn't change the bigger picture. The oil market is still on track for its third straight monthly loss, with widespread fears of a global supply glut weighing on prices. The crypto update, the great rotation. Finally, let's turn to the digital asset space. As gold, the traditional store of value, was crashing, where was that money going? Many analysts are pointing to crypto. Bitcoin was trading firmly, rising from earlier lows to trade around $110,500. The dominant narrative in the crypto world right now is this great rotation. We are seeing significant chatter about institutional flows moving out of gold and into Bitcoin, with many investors now viewing Bitcoin as the superior modern-day inflation hedge and safe haven asset. In other crypto news, the exchange Kraken made headlines by publicly urging UK regulators to move faster on stablecoin and tokenization rules. claiming the UK can do better. And analysts at TD Cowen published a note arguing that a recent flash crash in the crypto market, which saw 19 billion in liquidations, actually proved the ecosystem's resiliency as Bitcoin and Ethereum held up relatively well. Today's outlook. So to summarize the last 24 hours, the market is living a double life. During the day, old economy stocks like General Motors and 3M pushed the Dow to a new all-time high, but after the bell, the tech sector sent up two major distress flares. Netflix missed earnings and is trading down 5%, and Texas Instruments issued a dire warning for the upcoming quarter, sending its stock and the entire semiconductor sector tumbling. At the same time, we witnessed a historic 6% crash in gold, while Bitcoin held strong, fueling the narrative of a massive rotation between the two assets. The key themes to watch in today's trading, Wednesday, October 22nd, will be the fallout from those tech earnings. Will the weak guidance from Texas Instruments drag the entire market down? Or can the strength in the Dow's industrial champions keep the rally alive? And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel. I would see you in the next video.